Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. So happy to be back with you again today. I'm your host, Dr. Alan. Our guest today was a fulfilled professional, content in his profession, but who found himself becoming an accidental real estate investor. The story of his journey from IT professional to real estate investor will enlighten and inspire. Like our guest today, you may be a busy professional passionate about the work of your calling, but have come to realize that the hope of developing financial independence has taken a backseat to priorities of following your calling. If you can identify, I have great news. Steed Talker Capital is an investment company designed for passionate, fulfilled professionals like you, so you can follow your calling while at the same time develop financial independence built on solid passive real estate investments. Go to our website today and enroll in the Enlightened Investor Circle. There you'll receive education and support for your passive real estate investment goals. Our guest, Eloy Retana, is not only a real estate investor, but he is also the author of the book, The Top 3 Reasons to Invest in Mobile Home Parks. Today, we will explore why, during the pandemic, mobile home parks have outperformed all other real estate asset classes and why they just might be a safer asset for the passive real estate investor to invest in as we enter a period of economic uncertainty. Eloy, before we delve into mobile home park investing, share a memorable experience from your formative years that helped you to be the person you are today.
Well, thank you, Alan. First of all, let me express my gratitude for having me on the show. I'm very happy to be here. To answer your question, I think one of the things that happened to me fairly recently that kind of really just shook up my world was, like many other people back in 2008, right, when during the big stock market crash, seemingly overnight, I lost everything, right? Because up until that time, I had a lot of money invested in the stock market, and my stockbroker at the time had a lot of that money invested in a lot of these REITs, right, which were backed up by paper mortgages and things of that nature. And overnight, it seemed like I lost everything. So that's kind of when I had to take a step back and kind of try to figure out how can I recover from this, right? And I felt like I was still, being in my early 30s at the time, I felt like I still had plenty of time to recover from this, right? If I were in my mid-60s or my 70s and I was on the verge of retirement and I lost everything, which I'm sure happened to a lot of people during that time. But I wasn't in that boat, and I felt like, okay, I can recover from this, right? And maybe I should take a second look at some of the things that I've been ignoring up until now, which is mostly real estate. If I'm going to rebuild, I'm not going to rebuild on, with the stock market. I think I'm going to do it with real estate.
Well, 2008 was definitely a rough time for many of us, and I certainly experienced the same thing. Even though I loved my profession in 2008, I found myself without it, and I certainly know what it is like to have nothing. Although I was not in my 30s, I was in my 50s when that happened. I did have some real estate investing, but it certainly was not enough to sustain the lifestyle that I was accustomed to.
Right.
So I can totally and completely relate to where you were in 2008. So talk to us a little bit about how you were able to develop a mindset to rebuild and to come back from that very devastating experience.
Right. So I think at that point, I needed to take a step back and try to figure out, well, what exactly do I need to do to recover from this? And what are my ultimate goals, right? Because I was thinking of what maybe I should flip some homes, maybe I should do some wholesaling. And that's all fine and good. And it's not a bad way. I wouldn't discourage people from trying to do that if that's what they feel they need to do to make a living. But I felt that sort of thing was more transactional, right? And I had done one or two flips here and there, but it wasn't really, ultimately, it wasn't what I wanted to be doing, because I had a full-time job and I enjoyed my job, and I didn't need another job, because effectively that's what flipping and wholesaling is. So they're effectively jobs, right? I didn't need another job. What I needed to really do is kind of build out my cash flow portfolio, right? Rather than concentrate on transactional type deals like, flipping a home or a wholesale deal here and there. I really needed to build out my rental portfolio, right? And I had previously, in years before, I had taken out, courses like lease options, and I knew about owner financing, and I had done a deal here and there. But I was really more focused on my career in IT, where I hadn't really jumped into real estate, full time. And now being at this crossroads in 2008, 2009, after having lost everything, I was like, okay, I really need to take these sort of things, these investments. I need to take them more seriously, and I need to figure out how to be able to scale up so that I can build not only cash flow for the coming years, but leave some sort of legacy wealth, for my children in the future.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn. Well, we certainly do have a lot of things in common. And it's not at all surprising to hear that you had delved into flipping and rehab and wholesaling and different things like that. It seems like so many people who have an interest in real estate investing, it seems like many of us start out on that path. Right. And like you, I was doing that while I was working a full-time job that I loved. And it was, a lot of people think that university work is a cushy job, and university professors work 25 hours a week and yada, yada. Well, that's not true. University professors are putting in 60 to 70 hours a week. And I was doing that and loving it. And at the same time, trying to do some flipping and also some buy and hold. And actually, it was a buy and hold that actually did save me when I actually lost my position. So you switched from that, like many of us have done. What was the light switch that went off in your head that said, this isn't going to work this way. I've got to find another way to get to where I want to be financially?
Well, as you know, here I live in Denver, and out here, even for the last 10 years, it's been really, really difficult to try to acquire investment property, income-producing investment property, right? Because the prices, especially now in 2021, the prices are just sky high and outrageous, and trying to find a single-family home that's going to cash flow it's nearly impossible, right? So.
Yeah, I think the average price of a home in Denver is about $450,000, and Denver has one of the higher cost of livings in the country to go along with those high prices. So it definitely is challenging. Yes, indeed. Well, sorry to interrupt you, but go ahead there.
Yeah, so I was going to say that if my true goal was to develop income-producing properties, then I was going to have to look at other markets, right? Maybe something that's not maybe more remote. And not, so I looked at that time, I was looking at Tucson and Phoenix, stuff, where I have, family, Vegas, where my mother lives. And, you can find properties here and there, but at that time, I started looking at doing multifamily, right? Because it was a way, from reading the books and listening to the podcasts, and even going to some of the local REIA meetings here in Denver, multifamily was the big talk. And, at the beginning, it didn't make a whole lot of sense to me because I figured, well, I don't have millions of dollars, right? And talking to my friend and partner, he wanted to do apartments as well. And I thought, well, I don't have millions of dollars, right? And I didn't know that apartments was even a thing. But the more I listen to the podcast and listen to some of my friends here at the meetups, the more it started making sense to me that if I wanted to get to, income producing properties and be able to scale, the only way I was going to be able to do that was to be able to partner with somebody who was like-minded, who had the same kind of goals, and to be able to go bigger. right, with multifamily, and then later specifically with mobile home parks.
Yeah, I think that's the one thing that keeps a lot of people out of apartment investing is that they think they have to have their own money, which is not the case. There's a number of different ways into that avenue. And when investing in syndication, it takes a whole lot less than what most people think.
Right.
So you found your way into multifamily and realized that you were going to have to find a like-minded partner. And obviously you found that. But you actually didn't end up investing in apartments. You went the mobile home park route. How did that come about, and why focus on mobile home parks rather than apartments?
Right. So when we started looking down the road of acquiring a multifamily property, we ran into some of the same issues that we ran, when I was looking for single family homes. Everything in Denver was just so overpriced. Things in Phoenix and Tucson, the numbers just didn't add up, right? So we figured, well, we might have to look at other markets if we want to land a decent deal, being that it would be our first one, right? Trying to find partners who would want to partner with somebody who hadn't done a deal before. That was presenting its challenges of its own. And then we decided to concentrate. Well, let's concentrate on, at that time, it was Kansas City and Orlando, because these are markets that we both like. So we decided to focus in on those markets to try to find some sort of multifamily property, even if it was something small, like 16 or 32 units. If we figured, let's just get one under our belt, right? And we'll build from that. And we figured it was going to take us about a year to find something. And it took exactly that. Well, 13 months before my partner called me and said, hey, I think I've got something pretty solid. And I thought, okay, what do you got? Because I found a trailer park. I was like, what? A trailer park? And it's like, no. So my immediate reaction when he told me that was like, no, I want nothing to do with a trailer park. Are you kidding me? How did we go from looking for an apartment complex to finding a trailer park? And he was telling me, well, no, look at these numbers. I mean, we're never going to find numbers like these with an apartment. And I took a look and I thought, wow, these are actually pretty good numbers. And so I took a step back and I said, okay, Steve's his name. My partner's name is Steve. I said, Steve, give me 10 days to bury myself in as much information as I can on this deal. And he said, okay, well, hurry, because this deal they're not going to wait for us, right? So I took basically a few days to just read up everything that I could get my hands on. I downloaded every book that I could get my hands on that talked about mobile home parks. I downloaded every podcast at that time and just basically buried myself in mobile home park information. And at the end of that, after doing that for several days, not only did I conclude that mobile home parks were the right thing for us as a new team, but given the uncertainty around the economy, I thought this was the perfect asset to be invested in. So if we're gonna start something and build out, what better way than with mobile home parks? So that's how we got started with mobile home parks.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolios selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
Well, you're not alone in being surprised about the fact that mobile home parks can be a really solid investment. And if done correctly and with the right management and what have you, it really is not only a higher return on investment is possible with mobile home park investing, but they can also be ultimately, if done correctly, really a lower risk than apartments can be oftentimes. They do come with their challenges, that's for sure. But how have your mobile home parks fared throughout the lockdown and the pandemic? You're investing in Florida, which hasn't had some of the stricter lockdowns, but they did have a period of lockdown just like everybody across the country did. But how have your parks fared?
Well, not just our parks, but some of our colleagues and some of the groups that we belong to, we haven't seen the level of like these people not paying their mortgages, or the way some people that live in apartments, are experiencing during the lockdown. We haven't seen any of that. With our mobile home parks, we haven't seen any. Everybody's been paying their rent on time, and part of that is the fact that most of our units, our mobile homes, are actually owned by the tenants, right? So they have an incentive to continue to pay their lot rents because, they potentially risk losing their homes, which, they probably own free and clear. So there's an incentive for them to continue paying. And that's ultimately what we aim to do when we acquire a park is, in most cases, we want to sell any park-owned homes to either the tenants that are currently live there or to sell them out in the open market. So from that perspective, mobile home parks have seen an incredible explosion of interest within the investment community due to that fact, right, that during COVID, they survived and are not only surviving, but excelling during the COVID. So what we see is that if we do have a downturn in the economy, we're probably going to see a lot of the same sort of results where people are going to be looking for cheaper homes and more affordable housing. And mobile home parks fit that bill.
Yeah. Mobile home parks, generally speaking, are for lower income individuals. And I think that's one reason they fare so well throughout recessions, because people are being kicked out of their apartments because they can't pay their rent. The next stop is oftentimes a mobile home, and mobile home parks offer that economic way to live in a comfortable and oftentimes a nice aesthetic environment.
Not mention that in Florida, where we ended up buying, there's an incredible population boom lately, right, from all the people migrating down into the state, especially during the last couple of years. In fact, at least I want to say that at least for the last 3 years, I think this is the first year that Florida is not the top migrated to state according to the U-Haul statistics, but at least a couple of years previous to that. People want to live in Florida. So if you're a landlord, there's no shortage of people that are going to be looking for places to live, which is right. It's a great thing if you're a landlord.
Yeah, I have in the last year or so here have looked into a couple of mobile home parks, and I have not gone into them because the parks own most of the homes. And have you found that in your looking around to mobile home parks? And what do you do when you come across a park where, I've come across several that the owners are wanting to sell, but they own 100% of the homes, and that's just not something I want to get into.
Right. The challenge with something like that is lending, right? The lenders don't want to lend on the mobile homes themselves, right? So what you'll find is that a lender will lend on the land, and then you have to come up with the rest of the money to pay for the mobile homes. So that poses a challenge for a lot of people, right? And given that as it stands, there aren't a whole lot of banks that want to touch mobile home parks in the first place. Well, that's definitely a challenge. Most of the parks that we've acquired have some mobile home that are owned by the park, right? And it's manageable, so we can acquire the park, and then as soon as we acquire them, we sell the mobile homes. Ultimately, in most cases, we don't want to own the mobile homes. We do have a park where it made more sense to keep them, fix them up, and then rent them out. So it's not always 100% of the case that we want to not own them, but most of the time, we want to be able to take care of the land and take care of the infrastructure. And usually there's at least one or two stick-built homes on the land, which we obviously own by the park. But in most cases, we don't want to own the homes themselves. But it's a challenge. If you have a say 100-unit park and it's got 100% park-owned homes, lending could be an issue.
Yeah, well, just owning the land rather than the homes, that's one of the most attractive things about a mobile home park. But there are still operators out there who, for some reason or the other, want to hold on to those mobile homes. I actually did own a park many years ago, and when I purchased it, all of the homes were owned by the park, and so I continued it that way. But the fix and repair constantly with mobile home parks. That's not something I want to repeat there.
The other thing that you can keep in mind, and some of your listeners can keep in mind as they're looking at mobile home parks is private utilities, right? Because a lot of my partners, he was a builder and a flipper himself, so he was very used to buying land out in the middle of Teller County, where there's a lot of forests and trees and all that, but there was no infrastructure, so he would have to dig wells and bring in his own utilities, right? So he was kind of used to that. But me, when I look at a park and I see septic systems and water wells, I'm like, oh man, I don't know if I want to touch into that. But as long as you're comfortable and you understand these systems and these systems are being properly maintained, it's not a reason not to do a deal. You just have to be aware that you, as a landlord, owner of the property, are responsible for the upkeep and maintenance of a water well or a septic system. And if you're not prepared to do that, then maybe you shouldn't be looking at that property. Ideally, sure, we want properties that have public utilities. That would be great because it's just one less thing to worry about. But if it has private utilities, we're not going to shy away from that deal either, right? It's just something to keep in mind.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
Yeah, of course, the ideal are public utilities, but my guess is that probably the majority of mobile homes are private septic and private well oftentimes, which from my understanding is that I suppose it depends upon the size of the mobile home park, but you not only take on that private thing, but you become actually, in terms of regulation, you become actually a public utility. And so you have to follow all of the water regulations and septic regulations that any public utility has to follow. So that is certainly something to be aware of if you are looking at mobile home parks. Well, what do you feel is the key to the success of your partnership? Real estate is a relationship business, and it's unusual that people are going to be able to go into real estate without partnerships. So talk to us about your partnership. Why is it successful? And really, what are the keys that people should look at when looking at partnerships?
Well, I think one thing that is definitely key is you have to have the same goals, right? If your goal is to flip a property and cash out, while your partner wants to flip the property and hold it, for long term, those are two different goals, right? So I would say that right off the bat, you need to decide, okay, what are your long-term goals here, and can I find partners that are like-minded? If we're going to be buying hold guys and we want to keep these properties for long term and cash flow, then I would say let's start with that. And that was the case with us, is that we both figured, well, my partner Steve was a flipper and a developer, like I was saying, but he saw that the writing was on the wall, that wasn't going to last forever, right? And he needed to build out cash flowing properties. And the same thing, I've been doing IT for 25 years and I don't want to do that forever. I want to be able to build out wealth, right? For something to my children. And the only way to do that isn't going to be through a job. It's going to have to be, in my case, through real estate, right? So my whole thing was, how do I build out a cash flowing portfolio, right? And for Steve, my partner, that's what he had. And if we were to bring in a third partner, he would have to be of the same mindset that, all right, if we're going to flip this property, we're going to keep it for a long time, right? And that's kind of our goal. And I think a solid partnership just starts with just having some basic things in common. What do you want to do? What are your goals for the future? Those, I think, let's start with that.
Yeah, goals definitely are important, and you need to know, individually as where you are going and what you need and what you want in life. And then if you can find someone to mesh with that, then that oftentimes can make a good partnership. Of course, not all partnerships in real estate are permanent and not even intended to be that way. Many of them are partnerships around specific properties. And once the property is dealt with and disseminated, then the partnerships end naturally. So different types of things to look at in terms of relationship building and partnerships there. Well, before we go into our last segment, Eloy, tell our viewers and listeners how they can get in touch with you.
Yeah, the best way to get a hold of me is, go to partnerwithapex.com. You see it right up here. You'll see a Calendly pop up when you drop in your email there, and then you can schedule a call to talk to me. I love to talk with you and see how we can partner up together.
All righty. And we will have that in our show notes as well. Well, Eloy, share with us one of your most difficult setbacks, and you may already have done that. But talk to us a little bit how you came through that time and what did you learn from that experience?
Yeah, I go back to what happened in 2008 because it was so life-changing, right? It's one of those moments when you realize, okay, what all this money that I've been saving and my future is now really in jeopardy because I've lost everything, and it really shook me up as it did probably millions of other people. And like I said, for me, I was young enough where I felt like I had time to rebuild, right? I just needed to have a solid game plan. I needed to be focused, and I knew where I wanted to be, in 10 years and 20 years. And it was around building out cash flowing assets. I figured that out pretty quickly. I wasn't jumping around too much and trying to find my way or trying to reinvest in the stock market. For me, I don't invest much in the stock market anymore. I still have my Roth, but that's about it. I'm focused on real estate, and for me, that's where it's at, and that's how I'm all in on real estate.
Well, for what are you most grateful for in your life these days?
Most of all, my family. They've been supportive of me from the beginning. They trust me with what I'm doing, and what can you say if it wasn't for family, the people who love you the most and supportive, they're always going to be supportive of me. If without them, what do you got?
Well, imagine that you have come to the end of your life, and as you lay on your deathbed, what do you look back on as your most satisfying and fulfilling experiences?
Well, the fact that I thought about this actually because I don't want to end up on my deathbed with regrets, right? I didn't do this. I wish I would have done that. I wish I would have traveled the world more. So I do those things, right? I travel as much as I can. I want to see every area of the earth that I can while I'm here on earth, still alive. I do a lot of that. So not living with regrets. I don't want to live with regrets. I don't want to be on my deathbed with those sort of regrets.
Don't want to be on your deathbed looking back, I wished I had done this. A good way to live our lives in the moments there. Yeah. Well, Eloy, it has been a pleasure having you, and it has been an enlightening experience. So thank you for being on the show today.
Thank you for having me, Alan. I really appreciate it.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.